Hey everybody, in this video I am going to show you and teach you all about how to get an SBA loan for your business. I'm going to discuss what are the qualifications, what are the benefits, what's needed to apply, and what's really the process look like. I'm also going to clear up a few challenges that most people have when it comes to an SBA loan, because there's a few different types of SBA loans that you can qualify for, and I'm going to explain the differences between those. So first, I just want to go about telling you and discussing what are the benefits. An SBA loan is usually the cheapest and the longest term financing program you can get for your business, all right? And that in and of itself is very helpful to know. And if you have major projects, you want to buy a building, you want to consolidate debt, you want to add equipment, an SBA loan is really perfect for large expenditures that are going to help your business grow. All right, that is very important to think about when you want to get an SBA loan. All right, so I'll kind of walk you through that before we talk about what the qualifications and the process look like. So an SBA loan, typically there's three types. There's the working capital, which is going to be $350,000 and under. That is the easiest one to get out of the three. Then you have your normal SBA that's above $350,000, right? That's going to require some type of collateral. And then you have the commercial real estate, or the CRE SBA, all right? And that's used for when you want to buy or refinance a building. Usually it's best to use it as a purchase, and the little trick to qualifying for that is simple. When you have rent, let's just say you have a building that's worth $1 million, you're in contract for it, and you're currently renting it or renting a similar building elsewhere in the area, all right? If your rent is $8,000 a month or $9,000 a month, and by you buying that building and having a mortgage and now owning it, if the mortgage payment is less than what you're currently paying in rent, you have a really good shot at getting that approval. All right, so that's like one little trick when it comes to this. But let's talk about the other SBA programs, right? So a lot of people finance their business, at least to start and initially, through personal debt. It's not the best way to do it, and it kind of drags on your credit. You could also have a lot of business debt. You could have advances. You could have lines of credit that are maxed. You could have a ton of credit card debt. You could have vehicle loans, equipment loans. So an SBA, when you have an SBA, it really is a great vehicle to go in and consolidate all your debt into one lower monthly payment at a cheaper rate. Typically an SBA loan is prime plus. So when you're getting a rate like that and you're consolidating debt, you're going to save a lot of money. You're going to save a lot of interest. It really is a wise decision for your business, especially when you're trying to grow. All right, so those are like the big uses for an SBA. You want an SBA to consolidate debt, to purchase a lot of equipment. You want it to purchase a building. These are the things that are going to really help your business. What you don't want to do is you don't want an SBA loan for short-term needs. All right, and I know I'm jumping ahead in how to use it, but I just want you guys to be very clear on this. You don't want an SBA loan to buy a bunch of inventory to put into marketing. Those are things that you're going to need over and over again. You're going to have to repurchase inventory. You're going to have to spend more money on marketing. You're going to have to spend more money on adding staff. So those are really best used for a line of credit or a working capital advance, depending on what you qualify for. All right, let's talk about the qualifications of an SBA. So you need at least 2 years in business, and you need at least a 680 credit score. That's right off the bat. Second, you can't have any felonies. You can't have any government debt, including student loans that you were late on or defaulted on. All right. Even if you co-signed, let's say your child is in school and they did not pay their student debt, that's going to be a big hurdle to come around, to get around. All right. So you have to be aware of that. Next, you need to show profit in the business. You need to show that you can, one, service the debt that you're going to take on, right? So how do we analyze that? They're going to look at the last 2 years of business and personal tax returns. So they want to see, one, the business can handle the debt, and two, that your global debt service, which is what happens when you look at the business tax return and the personal tax return, they essentially combine them together, and they want to see what your global ability to service debt will be. All right. So these are all things that are going to come into play. So 680 credit score, 2 years in business, you have to be showing a profit. Now, there are things people understand that, you might write certain items off, right? And there are such things called add backs. So when we're going through the tax returns, if we can see there was a lot of, depreciation of building or other items that brought your taxable income down, those can get added back in to show that you can service the debt. All right. So that's important to understand, but that's really what's going to drive whether you get approved or not. It's not so much how much, the collateral does come into play, business credit comes into play. There are other minor factors, but the major factor is your ability to service debt and what your credit score looks like, right? And a quick and easy step is, let's just say you do have a lot of credit card debt and it's weighing down your credit score. One thing you can do, and one thing we've done successfully for our clients, is you can get a personal loan to consolidate all of those, wait about a month after or 2 months for it to report, and then all of a sudden your credit score is at that 680 mark, and then you can consolidate everything. All right, so what's the process look like? Well, the process is going to be, you're going to need to send in an application. You're going to need 6 months business bank statements. You're going to need the last 2 years of personal and business tax returns showing a profit. You're also going to need a driver's license, a voided check. You're going to need your prior year's year-end financials. What are year-end financials? A profit and loss and a balance sheet. Then you're going to need the most recent year-to-date profit and loss and balance sheet. All right, and they want to see that you are making a profit and that the business is trending in the correct direction. You could need an asset sheet depending on how much you're looking to borrow, and you're going to need a debt schedule. Basically, all a debt schedule is, it breaks down all the debts the business has, and a lot of that is what you're going to want to consolidate, right? So you would put business credit card debt, personal credit card debt, any type of loans that the business has, lines of credit that the business has, working capital advances that the business has. All of that would come into play, and you'd put that on the debt schedule to try to consolidate as much as possible, and then net out whatever you'd like to net out. Right? This whole process can take, if you're doing the working capital advance, it could take, less than 20 business days. If you're going for the SBA CRE where you're purchasing a building, that could take 20 to 40 business days. And if you're doing one of the larger SBA loans, I would say 20 to 30 business days, right? So an SBA loan is ideal, right, when you're consolidating debt. It's ideal when you have a major purchase. It's not ideal when you need money quickly, right? So when you need money quickly, you want to use equipment financing. You want to use a line of credit. You want to use a, working capital advance. Those can get done in, let's just say 1 to 5 business days. When you're talking about getting an SBA loan, you have to understand an SBA loan is going to take time, and that's normal. It doesn't matter where you go to, there's a lot more work involved, all right? And typically, an SBA program is the best program when you have those big expenditures, right? I just want to review this again because I think it's very important to understand this part of it. When you're trying to grow your business and you have a large purchase, that's when you go and you get an SBA, or you're trying to consolidate debt into one payment. It's not something you want to use for short-term needs like marketing, adding staff, adding inventory, because those things are much better suited for a line of credit that you can consistently draw on. When you do in an SBA is going to be a monthly payment. It's going to stretch out over 10 years, ideally, right? It's going to stretch out over 10 years, and it does take time to get. So that's why you have to understand short-term needs. You want a short-term financing program. Long-term needs and bigger expenditures or consolidations, that's when you want to get an SBA loan. As long as you use financing correctly and use it for what it's intended for, your business will be able to grow and scale. A lot of mistakes that I see clients make and others make is that they think they need an SBA loan for short-term capital needs, and you really don't. All right. So what I want you to do is, I appreciate you guys on and learning from me. If you want to learn more about working capital advances, watch the next video.